Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at NVVE.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis. And for you, the listener, NVVE is it's really one of the most volatile and I'd say high-stakes stories in the whole EV infrastructure space right now.
It really is. I mean, this is a company with a potentially transformative technology, but they are absolutely trapped between a financial rock and a regulatory hard place.
It's a truly pivotal moment. When you look at all their recent corporate actions, the picture that emerges is just one of urgent, almost desperate maneuvering.
Right. It all comes down to two immediate threats, doesn't it? A critical need for cash and a looming deadline that could get them kicked off the Nasdaq.
Let's start with that immediate financial pressure because that really lays out the bear case so clearly. Just this month, November 2025, NVVE structured a private financing round.
And it wasn't a massive injection of cash, was it?
No, not at all. It was a senior convertible note and warrants for a surprisingly small amount, just $277,777.
That small amount, and at a 10% discount no less, that kind of says a lot on its own. But the real, the alarm bell for any investor looking at the risk here is the conversion price on that note.
Exactly. That's the kicker. They set the conversion price extremely low at $201,384.
13 cents.
Yeah. And when you see a company selling convertible notes that let people dilute the stock at basement bargain prices like that, it just screams capital crunch. They're paying a huge price in future shareholder equity just to get some cash in the door right now.
And that $250,000 it's just a Band-Aid. The real massive hurdle is securing that future funding runway.
Right. We're talking about the pending need for stockholder approval for the sale of their Series A preferred stock. This involves 5,000 shares valued at $5 million, which they sold for $4.5 million.
And that vote, it has to happen by December 31st, 2025. It's not optional.
Not at all. And this isn't just about getting that initial $5 million. It's the key that unlocks the door to a much, much larger, potentially company-saving facility.
The big one. That approval unlocks a massive committed equity facility. I believe it's worth $25 million.
Correct. So if the shareholders vote no on that initial preferred stock sale, that entire $25 million facility just poof, it vanishes. Yeah. And the company is staring at insolvency. This vote is literally about survival.
And the Q3 financials from 2025, they just hammer this home. The revenue side was, frankly, weak. Total revenue was only $1.60 million.
Which is a year-over-year decline.
Yeah. And that led to an operating loss of $5.11 million and a net loss of $4.79 million. I mean, those losses, combined with a shrinking top line, that is not a recipe for stability.
And the liquidity picture is, well, it's frighteningly thin. As of September 30th, 2025, their cash position was under $1 million.
Just $0.94 million in cash.
Right. Pitted against total liabilities sitting at nearly $12.94 million. They are running on fumes, which is why that December stockholder vote is the absolute #1 thing driving the stock right now.
And on top of that severe liquidity crisis, you have the regulatory time bomb.
NVVE got a Nasdaq delisting notice back in September.
Because their stock had been trading below that $1 minimum for 30 days in a row.
And they were granted a temporary lifeline, a reprieve from the Nasdaq hearings panel, but that life support is explicitly scheduled to be pulled on December 31st, 2025.
So you have a company facing this dual existential deadline at the end of the year. They have to get the funding approved and they have to get back in compliance with Nasdaq.
Failure on either one of those leads to very, very serious trouble.
Let's just pause on that. This is a terrifying picture if you're only looking at the balance sheet.
Yeah.
Less than $1 million in cash, almost $13 million in debt, facing delisting, all hinging on a vote that's just days before New Year's.
It makes it feel like an ultra-high-risk lottery ticket, but, and this is the interesting part, this is why it's such a high-stakes story. If you look away from the balance sheet for a second and look at the actual operations,
you find a very different story.
You got a story of a turnaround that is genuinely surprising.
Exactly. We have to pivot now to the bull case. Because while the revenue was down, the operational efficiency, their financial efficiency, it improved significantly.
This is the absolute core of the bull argument. Despite those huge losses in Q3, the rate at which they are burning through cash has just plummeted.
So if we look at the net loss per share,
it narrowed dramatically from $2.47 per share in Q3 of 2024 to just $0.24 per share in Q3 2025.
That's incredible. That is nearly 90% reduction in net losses year over year. That is a massive turnaround in how they're managing costs.
It is. Now, the skeptical investor, of course, has to ask a question.
Did they just hit the panic button?
Right. Did they just slash R&D and expansion spending, killing the long-term growth engine just to survive the next 60 days?
That's a very fair question, and the market is definitely watching that.
Yeah.
But even with that skepticism, it signals that if they can just get through this December gauntlet,
The underlying business is showing signs of being scalable and maybe even profitable in a way it just wasn't a year ago.
and what gives them that long-term potential in the first place, it comes down to their core competitive advantage, their tech.
That technology is V2G, vehicle to grid. Nuvei is a leader in EV charging and grid integration. And, V2G isn't just about charging your car.
No, it's about making your EV an active asset for the grid. It can sell power back to the grid during peak demand.
So when your car is just sitting there in a parking lot, Nuvei software manages the battery to provide services to the utility. It essentially makes the car owner a player in the energy market.
And that is their proprietary moat. This isn't a totally saturated market. There are very few really entrenched competitors in V2G software. Nuvei has that first mover advantage.
They're not just another EV charging company. They are a grid energy management company that just happens to use EVs as its storage units.
And that technological potential, plus that operational efficiency story, is what led to the huge catalyst that was announced on November 20th.
The strategic partnership with Socorro.
Exactly.
That partnership is critical. It's expected to speed up their electrification efforts, open new revenue streams, and crucially, it validates their V2G model to a much broader audience. It shows that despite the financial mess, their tech is the real deal.
And if you look at the people closest to the situation, the senior management, you see a lot of confidence.
Insiders are aligning their incentives with future success. For instance, the president and COO received a grant of 2 mils in stock options.
And when do those vest?
December 31st, 2025, the exact day of the Nasdaq deadline.
That suggests a pretty strong internal belief that they're going to navigate this crisis successfully. Insiders don't usually double down if they think the ship is sinking.
Right. Which brings us squarely to the schedule. We have to focus on the next 90 days because these near-term events will determine everything. December is the ultimate survival test.
Let's just go over those two non-negotiable December deadlines again, because this is what the entire market is trading on right now.
Okay, first up, December 29th, 2025. That's the special stockholder meeting to approve that critical equity issuance.
And just to remind everyone, this is the key to unlocking the $25 million committed equity facility. If shareholders vote no, the whole game changes instantly.
And the second deadline? Just 2 days later.
December 31st, 2025. The Nasdaq compliance deadline. They have to get that stock price back above the $1 minimum. It's an incredibly tense, compressed situation.
Okay, so let's assume for a minute they clear those hurdles. What does early 2026 look like? What are the catalysts on the horizon?
January brings some potential market events, ETF rebalancing, institutional reporting. But operationally, the big one will be the first commercial results from that Socorro partnership.
And those are expected to start rolling in by January 2026.
Exactly. And then the big financial reveal will be the Q4 2025 earnings report. That's where we see if the efficiency trend is real and continuing.
That's expected around February 2026. The market won't just be looking for smaller losses. They'll be looking for any sign of a possible break-even on the EBITDA line.
Which, given the $5 million plus quarterly loss just a few months ago, would be absolutely monumental. It would completely change the narrative.
And of course, beyond the hard dates, there's always the buzz, the speculation that drives these volatile stocks. What are the rumors floating around?
Well, the most practical chatter is about the listing. There are rumors of a possible reverse stock split being prepped as a backup plan to meet the Nasdaq requirement if the price doesn't get above $1 on its own.
A move nobody loves, but sometimes it's necessary for survival.
Exactly. And given their vulnerability, is there any acquisition talk?
Oh, absolutely. There are persistent rumors of inbound acquisition interest. Because Nuvei has this valuable V2G tech, it makes sense that a bigger competitor might try to buy it on the cheap while they're financially weak.
And any rumors on the product side?
Yeah, speculation includes a new V2G software version and a big push into school bus electrification.
Which makes perfect sense. School buses are huge batteries on wheels that are parked most of the day. They're ideal V2G assets.
If that gets confirmed, it would be a major catalyst. Now, let's switch gears to the technicals because this is where the market is signaling the potential reward.
Despite all the fundamental risk we just laid out, the technical picture is extremely bullish.
So just for context, as of late November 2025, the stock was trading around 0.2558 cents. That's our starting point.
And analysts are projecting, well, an explosive move from there. The three-month forecasts are targeting a massive run towards $2.40 to $2.68.
And for December specifically, that do or die month, some technical projections suggest upside targets could hit as high as $2.80.
That is a more than tenfold return from where it is now. It shows you the perceived reward if the company just survives. But we have to stress the risk here. These are targets based on a successful December.
100%. If they fail the shareholder vote or the Nasdaq compliance, those targets are completely irrelevant. But the technicals show accumulation is happening now, suggesting the market is discounting some of that risk.
So what are the key technical levels for you to watch?
Right now, there's solid support forming a base right at that $1.25 symbol. That really needs to hold. The key resistance levels to watch are between $2.68 and $3.05. A confirmed move above that would signal a major breakout.
And what are momentum indicators like the RSI telling us?
The relative strength index, the RSI, is sitting right around 52.46. It's neutral, so the stock isn't overbought or oversold, which provides a good base for accumulation. Sentiment is highly positive right now, mostly because of that Socorro news.
So at the end of the day, NUVA is definitely not a low-risk investment. It's a high-stakes, highly speculative play.
Absolutely. The next 38 days are an all-or-nothing situation. The company has to navigate this period, get that shareholder approval, unlock the funding, and satisfy Nasdaq.
But if they manage to survive this year-end gauntlet, the whole story changes. The huge cut in losses, their proprietary V2G tech, and the validation from the Socorro deal, it sets the stage for potentially explosive growth in 2026.
The central question for every investor looking at this stock is pretty simple.
How?
Are you willing to risk capital on a company that has to pull off two Hail Marys in the next month just to unlock the capital it needs to capitalize on its very real operational traction? It's a truly binary outcome.
Survive December and thrive, or fail December and dilute or delist. That is a perfect summary of this really unique risk-reward setup. Remember to subscribe for continued analysis and wealth insights.